Welcome to Momentum Monday. Howard,
I'm here, baby.
how was your weekend?
It's fantastic.
Happy Independence Day. For a second, I was not able to hear you.
You coming over to Coronado tomorrow or no?
Tomorrow? I don't know yet.
When does is Bulgaria independent yet? Do you even have a holiday?
We do. It's on
What,
March.
You're happy that Russia has not taken you over? What's the independence about? What are you happy about?
We are independent from the Ottoman Empire.
The Ottoman. Is that Ford and General Motors? Who's the Ottoman? That's the Autobahn?
The Ottoman, that's the Turkish.
Oh, that's a footrest. Oh, the Turkish. So you're free from Erdogan?
Howard, if you know nothing about history.
I know nothing about history. I'm Canadian. We're like 11 years old. So give me a quick history for people. Bulgaria. Who are you excited to be free from tyranny on this great holiday?
March 3rd, 1878, Turkey.
Turkey? So you guys have been free 1878, 1978. Man, you guys are due for some kind of problem over there. You guys are sneaking around in Bulgaria, getting away with a lot of stuff. Does Trump even know any of this stuff?
I have no idea. You have to.
There you go. A Momentum Monday history lesson brought by two dumb traders. Okay, so hopefully I haven't offended but half our audience already. So let's get it off our faces. Oh, by the way, behind me I have a little trivia.
Mm-hmm.
That is Robin Hood in the background. I don't know if you can see that. That's what they sent after their Series A. I think they sent all the employees signed that cool poster and sent it to all their investors, which is pretty cool. So it's a little piece of history. Oh, hang on. Here. Hang on. Frame is my early Twitter some shares.
Okay, so the one to your left, the guy with the red nose, that's Robin Hood?
Yeah, that's you see the little green. Hang on.
They must be drinking a lot, you know.
Well, I mean, Robin Hood and the Merry Band, right? So you can see here's a vlog up here in the corner. He signed, and then Baiju. Now these signatures are worth us, like Tiger Woods. Okay, and then hang on.
Is there any other art you want to share?
No, that's it. That was a little humble brag to start.
All right, let's go to the chart art, I guess.
Maybe we don't want to do charts today. It's a holiday, Ivan. Maybe we should just ban it.
Sure.
No. Okay, let's get to the charts. So as usual, our charts are brought to you by Market Smith, the Investors Business Daily. And so we appreciate their support. Ivan, you've been, living on them for 2 months right now?
Yeah, I've been using them. I find their screens useful.
And by screens, you mean what? They offer a screener over there as well?
Oh, yeah, they offer the opportunity to filter the markets by various criteria. And I'm using a couple of screeners like earnings surprise and recent IPOs, which saves me a little bit of time.
Okay, now are we on the screen right now, or are we looking at us?
We should be able to look at my screen, but let me double check real quick.
Double check.
Yes, it should be just my screen.
Okay, so we've just last week we were talking about a correction, and I was in the cautious mode. It was pretty choppy last week, and today it's holiday trading, but it closed on the highs, I think, so that's pretty good.
Isn't that something normal though? Just the couple days before 4th of July are usually strong.
Yes, so I wouldn't read too much into this. We are in a correction. Easiest place to see the correction is in Chinese stocks and NASDAQ. You see the NASDAQ pulled back to, what is that, the 10-day, Ivan?
That was the 50-day moving average. This is the FXI. This is basically the Dow of China. And here's a different perspective, KWEB, which is the internet Chinese share.
That is a true correction. We were back in August. We were back at summer prices. And I look at Tencent, which I've owned forever, and it's just gone nowhere for a year. Let's take a look. It had a great run. Not giving up. It's trading below its averages right now. I'm not worried. But we are in we are in a good correction, and it's mostly time. Considering that run from 10 to 80 or 60, which we enjoyed, I enjoyed it from 20 to 60. We've been in this 20%-ish pullback now for about 6-7 months. So not horrible, not horrible. We're marking time. We're not getting these 40, 50% pullbacks. Oh God, bite my tongue, don't jinx, salt over my shoulder. We are seeing mostly time, Ivan. Would you agree?
Yeah, I mean, I think it's absolutely normal to see at least a sideways time consolidation after such a big move.
By the way, I'm excited. Like, this is like to wait a year. Like Nike, I waited 2 years after that great run to see this breakout. So, we're not even a year into this correction. Nike went from the great run in 2015. It took 3 years to chew through a great run. Okay, now, obviously, we're going to on this show. We're always looking for new ideas, but I also like to hold things for years and years and years if I can, because I don't like to time getting off a great trend. So Tencent and Alibaba had great runs. Here's Baba. And, you had this fake breakout here at above 200. Now we quickly move. Go back to a daily here on Alibaba. Nasty, breakout and a quick failure. And, if you really loved Alibaba, you can still get it at August of last year prices today.
Yeah, it's back in the range. So apparently it needs more time.
Which, to be honest, considering how great, how huge these companies are, the market is giving it, that we're not seeing these 40, 50% corrections like we used to see in Amazon and Netflix in their early days, right? These are big, mature companies, and they're choosing to, not choosing, but the market is allowing or is giving them the benefit of time. They're digesting these gains not through vicious sell-offs. It's not letting anybody in. So, the question will be, does this sideways action continue, trading range, or do we go into a deeper correction, which we do not know, or do we resume these massive uptrends? So, we're in this kind of chop. How would you characterize the S&P here, Ivan?
Well, I expect the next couple of months to be choppy, and probably the S&P will spend its time between 280 and 260 in just a sideways range. Of course, we'll have some individual stocks that will outperform and underperform, but I expect it to be a rough trading environment for swing traders. I may not be right, but we'll see.
And it's been choppy for you for the last few weeks?
For the past couple weeks, yes.
Okay. So one thing we should get across is, it doesn't always, you can't be an expert in everything. It is fun to try and learn different strategies. And the reason you try and learn a few different strategies is because you can go through 6 months, a year, 2 years, 3 years where certain things don't work. What I like about these ranges, and the longer they go, the better for me, is I like picking stocks. And, since November of last year, even though the markets have kind of been choppy up and down, there's been a lot of humongous winners. And so our job here at Momentum Monday is to kind of call the momentum and see what's working. What is through this chop, now that China's kind of pulled back and maybe, time to at least stop going down short term, what's been working?
We're seeing a bunch of new IPOs that are consolidating through time close to their all-time highs. And I think we might see some new potential leaders coming out of there. For example, let's take a look at this one, PTQ, which is another vet.
Beautiful range, a pretty wide range between 15 and 30.
Very choppy, very volatile, and today it tried to clear all-time highs, but after a substantial run, of course, in the past month. So keep that in mind. Probably it needs maybe a couple weeks to.
Yeah, MMYT did the same thing. If we look at India travel, it broke out to all-time highs, but from a really deep base in the, well, no, it kind of. again, it was like Alibaba. They broke out and came back. But so a lot of these breakouts aren't working. So PetIQ, good idea, Ivan, but to keep an eye. But it's come from that's an interesting one. And I love.
As I said, definitely, I would say it needs a couple weeks. I mean, in the best case scenario, maybe a couple weeks to just consolidate a little bit sideways, or maybe pull back a little bit before it breaks out. That would be the perfect scenario, but it doesn't always come to fruition.
But earnings growth has been great the last 2 years, and expectations.
Incredible numbers, definitely. And this stock has spent the past year going sideways, and its earnings have continued to grow at a substantial rate, a triple-digit rate. So at this point, it has become a good deal, even for some value investors.
Yeah, I can say as a pet owner, we were keeping our bagel, our beautiful bagel, alive for extra many months as we could. She was 14, so we were lucky relative, and so was Bagel, that she was healthy. But at the end, it gets expensive, and I was willing to pay whatever for many months to keep her heart and her lungs clear. And so pet owners will listen. I'm in a different pay grade. Maybe I can afford some of this stuff, but pet owners are willing to do whatever to save their family. And this is one that we recommended last year. It's kind of now marking time, but also a beautiful setup still.
They sell pets insurance.
Yeah. So this is like an old school roll up of pet insurance. I don't love. It's a financial roll up model, and you can see from the earnings that you can see how they're doing this. They're using their stock. They're not so much focused on earnings. They're focused on revenue and growth and acquisitions, and versus PetIQ, which is obviously an earnings play because they're actually in the drug business, whereas Trupanion's in the insurance business and in the customer acquisition business. So different growth scenarios, but the pet market, you have WAG, billion raised 300 million, which we're investors in. You had Rover raise hundreds of millions of dollars in the pet business, the venture capital business. So, it makes sense that these. So I'm a good one on the pet market. What else?
Well, I'm still keeping an eye on Stitch Fix. It's been consolidating near all-time highs.
My wife likes it. I bought some for my Rachel bought some. Very interesting model. Nordstrom bought a Chunk Club, an old competitor, a while ago. This is really the only pure public play on this clothing secondhand / design. Someone sends you clothes based on your profile that you fill out to build your. I personally am stuck in my own fashion, lack of fashion, Nike, Vans, and Lulu. But for the next generation millennial workforce, Stitch Fix, it's pretty damn interesting. And
it's all about the market mood. I mean, if we're in a bull market,
millennial play, Stitch Fix is super interesting. It didn't have that massive run after the IPO because it's not a tech company per se. But as a subscription business and in an 80-person millennial market that is in the workforce and can't just wear Lulu and Nike to work, although Lulu is starting to, at least on the men's side, on the pants side, I see a lot of my nephews who are getting their first jobs are using Lulu ABC pants. But Stitch Fix is super interesting. So I like that one as well, Ivan, and it goes with Lulu and Nike. And Vans has been incredible too.
What is the symbol?
I forget. It could be Vans.
I doubt it. But, no.
But I think they're owned by somebody. So I can't remember.
It must be owned by someone.
But I was talking about in my blog post yesterday, Nike's launched I think their first great Vans competitor skate shoe, and they have the retail stores. And I don't know. I'm just super, super bullish on Nike, not as a shoe company, but as a fashion company. Okay, so let's, what else, Ivan? Biotech. I really have to start studying. I've started following some biotech people. I'm reading as much as I can on the basics to try and find some big trends. The CRISPR stocks are the ones that interest me. So this is the index. This is XBI.
So XBI, it's a small cap biotech ETF. It tried to break out to new all-time highs, but apparently the market correction pulled it back. It's trying to hold above its 50-day. There's some interesting individual names.
I think if the index is not right, if you need to be long and put some money to work, I think this is an interesting XBI. Is you can enter this. We're in no man's land in a trend sense, in the sense that we're in congestion, and add to it above all-time highs and stop out, below 9, trade around it, or you can just wait for a clear breakout. But this is my favorite.
Yeah, if you don't want the individual stock risk.
Yeah, it's my favorite.
It might make sense for some.
Yeah, it's my favorite lazy idea to try and catch this trend if it continues. Within this index, so what's interesting, Ivan?
I have a few names that are looking interesting.
Wow.
This one, ICPT, it took quite a hit earlier, late last year, but it's been slowly recovering, and today it had a beautiful breakout. So it's one I follow. I mean, again, apparently not an amazing setup. It has a potential resistance.
Okay.
Potential resistance here.
REGN is like a big one that's starting to.
REGN, okay. Also back to potential resistance.
You can see how some of these bigger cap ones just got crushed. I'm just looking through a list here. Keep going.
This one is looking interesting on several time frames. Apparently, even on a daily and a weekly, try to break out today. It's a beautiful base here. You look a few weeks of tight range closing. So this is one of the biotech stocks I like. Another one is SPPI. It is consolidating near all-time highs. It tried to break out last week, but because of the weakness in the general market, it could not sustain its breakout. So if it manages
to hematology and oncology, okay, those are two hot buzzwords. So is that on the SL50? Did that make it or no?
This one, I think it is, but I'm not sure. I have to double check. Anyway, if it clears 23, I think it's off to the races. 15% of its float is short, so that could add fuel to a potential short squeeze at a weekly perspective. Some people say that it's a potential acquisition target, but you never know. It's a guess. For me, it's more important to see how the price behave. And as I said, 23 is the pivot that could lead to higher prices. And another one, SRPT, had a huge volume breakout here. I'm not sure with what news.
And I owned that last year for Rachel. It just took a big profit and it just doubled again. Yeah, what a beauty. So, and
it pulled back to its rising 10-day moving average. You cannot see it here, but
I'll give you an example how hard this is. One that I owned a few shares, ARRY. I thought it got great news. It got halted and still went back into congestion. So this was one that I've followed, ARRY. It looked great, got halted right at the highs on news. I felt like it got the news that it wanted. It's a great cancer. I've heard great things from doctors about their drugs, Array Pharmaceuticals. And obviously it's had a great run from $2 over the last 3-4 years, but right back into congestion. So this is one that I own a few shares of speculatively. I'm kind of down $1 or so on it, but I still like it. It wasn't bad news. It's that type of market where we're just, the stuff that should have worked isn't working. And the stuff that was working quickly stopped working. Or isn't working at the pace that it was working before, like in China. All right, what else, Ivan? So we got biotech, and we've got some pet stocks.
Yeah, that's all I have. Some of the Chinese stocks, the Chinese tech stocks, have pulled back substantially. So let's see if deep buyers start to step in. So these are some very interesting level. Alibaba also. I mean, any Chinese stock, any Chinese momentum stock is back to a very interesting level. Like Baozun, this is the Shopify of China. It's back to that level of like 50.
Yeah, we talked about that before. Let's talk about the trade war and what it does. I think, the government. I saw Wilbur Ross. This goes to macro stuff, stepping and said, "Oh, we'll never back down from the trade rhetoric." I think when you hear stuff like that, whether it's true or not, it definitely hurts companies. Let's look at the solar industry and have this trade war with China, which is supposed to like stop Chinese imports, but has really hurt. You can see the peak back there in when we really were the rhetoric about trade war with China, especially around solar tariffs. You can just see the index was breaking out. And so they say the government, you shouldn't worry about the government or religion or politics while you're trading, but you can just see right here a perfect technical breakout. If we look at First Solar as well, this is the index tan, but if you look at First Solar, same peak, just looked fantastic in March and April. And you can see like, and then the other one is SEDG, which was the hottest, solar stock. And as soon as that trade kind of war hit in, but this is probably the best looking solar chart still, which is more kind of systems for monitoring usage. So this is one to keep an eye on. It was really Sunrun. That looks fantastic too.
Yeah, that's another one that definitely looks
despite the tariff stuff. So that's a small cap stock, but let me go look at a weekly on that. Yeah, okay. So some solar stocks Ivan's still setting up.
This is the only one actually.
Well, Solar Edge has not broken its downtrend. It's been very volatile, but Solar it's just
it's very interesting level here for
sure. Very interesting level. If it holds these levels, it could be building a base. 95 relative strength, even though it was a vicious, breakout and pullback. If it's one to put on your screen. So okay, so so we got solar too, and then the oil stocks, which I'm not going to cover here, which just confusing to me, but Trump's out there tweeting about. Getting OPEC to cave, and they're denying. I don't want to be any. That's the ETF solar.
It's surprisingly choppy considering that crude oil cleared, I think, multi-year highs last week.
That way to trade oil continues to be own oil and own it with leverage and trade it with leverage, and that's just not something I do.
I don't know.
The ETF hasn't done any respect to what actual crude itself has done using futures. So oil back near $80, but that's a drag on the economy too. So I think it's just a lot of the market's doing very well considering there's trade wars, massive currency fluctuations. There is this nationalist type rise and the tremendous runs the companies have had, and so if the market. We should all be grateful the market's just kind of chopping around right now. Okay, let's end with a couple interesting ideas. Starbucks. When does this get interesting?
Well, from a really long-term perspective, I think 40 is the level that will attract some heavy hitters. Short-term perspective is just in a big range here, 45, 60.
Relative strength of 13. Pretty much hated. Where's the growth going to come from? The China story is old. I took it out of my 8 to 80 portfolio. Luckily, in the mid 50s, I gave up on it. Now we're in the high 40s. I agree with you. If I saw a bad market in this brand in the high 30s, low 40s, and there wasn't a lot of great ideas, this would go back in my.
Yeah, everything started last week when they. Announced that they're going to close 150 stores in areas that are heavily penetrated, and 150 stores is nothing for them. I mean, they close.
No, that could be stores within stores. No one would even notice.
They close 50, 60 stores a year.
Very local, bent on coffee and neighborhood stuff, and the country is oversaturated with coffee. Not that coffee is going away, but. Starbucks needs no different than Nike or any big brand. They're digesting and they've got problems and they got political.
It's very interesting because there are plenty of people that are willing to pay $4 or $5 for a cup of coffee, but most people are going after organic and local coffee, and it seems Starbucks has missed that trend.
They have, but Middle America is very big, so you just have to treat this a little differently. But they've got some regrouping to do. And then let's talk about the the darling, which avoids all fundamental. It's just a war zone. I watched the Tesla stream. Tesla's an amazing company, and here's why Tesla's amazing to me. I cannot believe how. I just cannot believe the passionate discourse, good and bad, around this company. I think Elon Musk has been a genius, at least while this works, at being in social media and stirring it up. I think in any end of the world, he's already got, from Patrick Byrne at Overstock, he's already got SEC invest. He would have the SEC up his ass, and he just continues to be there every day, pounding the PR for the brand and stirring it up on social media and regular media. And I have not met I've still not met a user that hates the product. I'm sure there are, but I haven't met them. But I haven't met a fundamental analyst that likes the stock. So it's just quite a battle here. And it's not a battle for me because there's no profits. But if they hit this $2.52, in 2019, there's no, this is what's funny. So on IBD, Ivan, it shows 252. Of course, if they hit this number, it'll be too late to buy the stock. But there is no reason in this company's history to believe that they can get profitable. So it's really an interesting battle. It's a stock that I watch just for mood. And right now, I've never seen it this.
The big problem with fundamental analysis is that
it'll be too late. If they're at $2.50, the stock's it's over.
Yeah, but
the question is, can the stock
backwards? And
yeah, I agree. The question is, can the stock continue to go with no? It's not Amazon. They don't have an AWS. They don't have this high margin. At least it's presented to me that I've seen some high margin API or service that they can offer. They're still in the car producing business, and you can see for the last 4 years it's kind of marked time. Wide range between $150 and $350. So it's at the top end of that range now. I think people need to be really careful here. I'm not saying it can't go to $600-700 just because of the naysayers. I'm just saying this could easily be a $200 stock. So it's just one that I'm watching because of the chatter. So
yeah, any stocks can go up 1,000% in a year and a half. I think it's normal to expect
incredible to digest,
even 10 years of digesting in a sideways.
So I think these are all still, and I would say this overall, this is bullish for the market. The fact that Tesla, which is losing $1 billion a quarter, is after this run has been able to keep their stock where it's at is pretty interesting. The fact that Alibaba, at these valuations, and Amazon and Facebook are marking time with sideways to uptrending still. To the fact that biotech, there's still risk on in biotech, to the fact that fashion is still a thing and actually gaining in momentum because the leading brands are crushing. I think risk is still very much on, but at the same time, I think you have to be a little more selective in this chop of a market. That's the way I would sum it up.
Yeah.
Okay.
Good advice. Yeah.
I'm going to let you go. Have a great week, Ivan. Thanks, Market Smith.
Thank you, Howard. See you next week.
See you.